Welcome to the Fifth Beast Production channel. I am not a financial advisor and please do your own due diligence when investing. Investors have been kicking the tires of Chinese electric vehicle company NIO since it went public in the United States on September 12. The price was near the bottom of NIO's hoped-for range, but it was enough to give the Shanghai-based company a valuation of about $6.4 billion. NIO, which offers upscale battery electric vehicles with a focus on performance, has billed itself as an up-and-coming rival to Tesla. It has heavyweight backing and has already begun sales of its first mass-produced vehicle, a zippy battery electric SUV. But while NIO's stock has risen a bit since its IPO, the offering raised less cash than the company had expected. That raised some questions about investors' appetite for electric car makers that aren't run by Elon Musk. Here's what we know so far. Is NIO profitable? Simply no, at least not yet, and it may not be profitable for a while. Although it has vehicles in production, NIO is still an early-stage company. It posted a loss of $502.5 million in the first half of 2018, on just $7 million in revenue, after losing $759 million in 2017. NIO had about $668 million in cash as of June, before the IPO. It should have about $950 million more than that now in 2020. Who are NIO's major investors? There's really only one major investor, that is. China's internet giant Tencent Holdings was a key early investor in NIO. Tencent currently owns about 21.5% of the company through a series of subsidiaries. What are NIO's vehicles like? NIO first came to the world's attention with the EP9, an electric supercar that it developed to launch its brand. The company's first mass-produced model is a high-performance 7-passenger electric SUV called the ES8. So far, it's only for sale in China, at a base price of about $65,300. Almost one-third of the price of Tesla. The ES8 began shipping in June. As of the end of August, NIO had delivered 1,602 ES8s and taken reservations with deposits for nearly 16,000 more. NIO's second vehicle will be a smaller 5-passenger SUV called the ES6. The company expects to reveal it by the end of 2018 and to begin deliveries in the first half of 2019. The big question, is NIO a buy? There are a lot of startup electric vehicle companies in China, over 300, by one estimate. On the other, China is likely to become a huge market for electric vehicles before long. NIO is better capitalized than many of its domestic rivals, and the ES8 has features that help it stand out as a premium offering. I think for US investors looking to get access to the likely electric vehicle boom in China, NIO might not be a bad bet. For starters, thanks to its decision to go public on the New York Stock Exchange, NIO is more transparent to US investors than many other Chinese companies entering this space. It is well capitalized, it has a partner that has proven it can build vehicles at scale, and it probably has enough money to get to a sustainable level of sales. Given where it is now, and the risks that lie ahead, NIO is not super cheap at its current valuation. But it stands a good chance of getting its vehicles into production as planned. If it does, and if its upscale electric SUVs win a steady stream of happy buyers, NIO's current share price can look very cheap a few years from now, but please remember to do your own due diligence and research, as I am by no means a financial advisor. But I will be investing and keeping an eye out for this stock. Thanks for watching, and I would appreciate a subscribe as it truly helps the channel, especially with all the editing and animation. Takes a lot of time to create.